Hello, everybody. Hopefully, all are having a great afternoon. We're starting this one at 3 p.m. instead of 9:30 because I went and saw my unborn daughter this morning, which was super exciting. Got to hear her heartbeat, took a measurement. Everything's normal. She's healthy, so good stuff. Anyway, markets have melted up this morning after the jobs report came in basically at expectations, which was 225,000 initial jobless claims, again, versus 225 expected. And I was looking at the trend over on the premium Discord. Let me see. Let me pull up a new window so we can pull up both Robinhood and the Discord. It's been a pretty good day for profits. I had a call debit spread that I had opened yesterday, 382, 383 strike prices. It's losing a little bit of its value with SPY dipping below that 383.6 support for right now. If we look at the RSI, it's just below 50, so that could be a sign to the start of bearishness. Again, if RSI is below 50, it's generally bearish sentiment, and if it's above 50, that's generally bullish sentiment. You also have to look at the context of the day. So today, of course, like I said, we had the good jobs report. Good. And it's been a very slow news day other than that. Really not much else going on. Pretty much all of the financial journalists have taken holiday and really haven't been posting much of anything this week. So since that's the case, the markets have been pretty dead for the week, and there's not been a lot of volume. Sorry, let me turn my music down a little bit. It's getting a little distracting to me. But if we go over to the Discord, I pointed out the trend for the unemployment data. So if we head there, it's pretty much flat since the Fed started tightening the monetary policy, increasing interest rates, and selling off their balance sheet in March of this year. Really haven't seen much change at all in terms of initial jobless claims. Now, I guess since it has been relatively high compared to like March through May, this could compound. I'm not really sure the effects of it. I guess this is initial jobless claims. So let me see. If we go over to economic data, we can actually, god dang it, I always go to economics MIT. Economic calendar. I'll link this one over in the chat. But we have the initial and then the continuing jobless claims. So I think initial is just when they initiate a jobless claim. So this compounds on itself. And then I'm assuming that continuing jobless claims is how many total people there are unemployed. Let's see, the measure of number of unemployed individuals who qualify for benefits, and then the initial jobless claims measures the numbers of individuals who filed for unemployment during the week. So exactly right. And if we look at the graph on this has actually been going up pretty decently ever since about September is what it looks like. And then August, November has been really bad. So this is about the same place that we were right before the Fed started cutting rates. Interesting enough, we had 1.6 or 1.7 million almost unemployed, and now we have 1.7 million unemployed. If we look at, say, the 2-year chart, the last time that we saw unemployment this high, excluding March, was, I guess, June. And it's just been on a continuous decline after, the whole COVID mess had everybody laid off, basically. Not everybody, but it's been on a steady decline now. Obviously, it's starting to incline a little bit, with the Fed raising interest rates, meaning that businesses have less capital available to them because it costs more to borrow money. So it's kind of bad for the overall economy, but sometimes good news is bad news and bad news is good news, and it's all sorts of flip-flop these days because it's all about what the Fed wants, right? The Fed wants people to get laid off so there's less money flowing throughout the economy, which means lower inflation. It's a necessary evil, is what I like to call it. A recession is a necessary evil if you want to get rid of inflation. And if you let inflation ride, you increase the wealth gap between people that are struggling to get by, living paycheck to paycheck, and then the affluent millionaires, billionaires who are sitting in their ivory towers and just, chilling, not giving a shit about a 10% increase in prices over the last year. But yeah, got a few trades open right now. The 382, 383 call debit spread that I opened yesterday. This one, I opened 30 originally. I sold 20 this morning on open. And right now they're going for 63. I think it's cheap. I think they're trying to sell me short on this. Even the ask price is 65. And I think these should be going for like 65 to 70. But markets aren't willing to pay that just yet. So markets don't really care what I think these should be valued at. They only care about what the other buyers and sellers want to buy and sell them at. So, what else we got? I opened an iron condor just about 30 minutes ago, and they're already gaining their value now that SPY is right in the middle between my strike prices that I chose to sell, which was the $383 put and a 385 call. So this one, I think I'm going to close. I do think that there's a decent chance that we're just going to continue to trade flat. My hypothesis right now is that to end the day, based on the news that I've been reading, based on a little bit of technical analysis from the RSI staying above 50, the MACD is starting to decline and flatten out though. So based on the MACD, looks like we're going to trade flat, but based on the RSI, it looks like we could go up. So I basically opened a call debit spread, assuming that SPY will go to 384 to 385 sometime by the end of the day. And then I opened a iron condor along with that. So basically these are hedging one another. Not doing exactly well since this one's down 65 and this one's up 30, but it's not delta neutral. But we are getting closer to 384, and I think once we reach 384 price level, then I'm just going to head on out of the iron condor that I have open. Hi, Roddick. All right. Yeah, I opened these at 19. The bid is 13, the ask is 17, so the bid-ask spread. Gotta love Robinhood is stupid wide. Robinhood's going to start closing my spreads at 3:30 p.m., so we got to get out of these in the next 20 minutes. In the meantime, while we wait for this to either head on down below 336 or back up to 384, I want to look at prospective new trades for tomorrow. So let's see if there's any major econ data coming out. I'll head on over to the watch list on the premium Discord that I post each Monday. So this gives like the synopsis of what's going on during the week. The week ahead, I should say. That's the morning update. I need the premium watch list. So the econ data coming out this week, we have Chicago PMI coming out at 9:45 in the morning, and then we have jobless claims came out this morning. So very slow into the week. I don't think that Chicago PMI has a high weighting to it. It is going to be the only data that's coming out, so it is going to have higher weight because of that. But if we head back to the, god dang it, economic calendar, I feel like this is a sign that I should go to MIT Economics. I keep getting that stupid website. Hi, Crypto Panda. But if we look at the weighting for this event, it is well, that is today, not tomorrow. It is a 2-star event, so it has a decent weight to it. Let me see the last reports that came out and see how SPY reacted to that. Maybe it's kind of hard to really tell if the dates also fall on other econ data. But let's see. The last report was 10/31. It came in below forecast. So let's go to SPY on 10/31. Using the daily chart. Wait, was it really 10/31 and not no report in November? Yeah. Oh, last report was 11/30. Okay. So 10/30 or 11/30. SPY started at 395.50 and went all the way up to 407. So that was a huge day for the market. I don't think that was sparked by Chicago PMI. Let's look at the last report. Was I think the 10/31 on Spooky Day. SPY hardly changed that day. Before that was 9/30. So let's look at 9/30. SPY went from 362 to 357. So about a 1% move there. So not really much movement on these Chicago PMI reports is what it's seeming like so far. If we go down to end the day, I will be shocked. The RSI is showing signs of getting weaker. MACD is about to go negative, so might have to head out of my bullish trade for sure. Cut losses there. So I originally opened 384, 385, called debit spread at 38 cents a piece. I just opened 5 of them. Didn't spend a lot of money on this trade because I didn't really believe in it too much. Now they're going for 16 to 18 cents. Let's see. Hopefully we can get it for 17. So we don't have to take a larger loss than what's necessary. Looks like we're catching some support at 380. I hate when SPY does this shit. It's just barely moving. Even in the 3 p.m. quote-unquote power hour, it's just not making hardly any move. How do you partially block out account number on Thinkorswim? It is under settings. Let's see. I don't know. I think it's under setup, probably privacy, application settings, account, display accounts, all default currency. I don't really know. Maybe profile? No, not profile. There's got to be something in the setting. Oh, so under account info, I think you press this button right here. Nope. You press on one of these and then slide the privacy to the right under account info. Yeah, options buying power. Right. Right here, right here. And then you slide it to the right. SPY is just screwing us by trading flat right now. Well, I guess we'll profit either way if it trades flat or if it goes up, but starting to lose confidence in it going up with it trading at 47 on the RSI. So I think we'll close this bad boy up. Take the L on it. The bid just dropped to 15. How annoying. I'll do 16. If I have to, I'll lower it to 15, but hopefully we don't. Nope. No, that looks like a sell-off right there. Start to a sell-off. Definitely below 50 RSI now, so that's confirmed. Damn it. Alright, I'll try to close them at 15, and that's the last order I think I'll place. I don't want to keep dropping my price. Probably going to head back to 383.6 one last time, I would think, but unless we just flush. Alright, I'll take a screenshot of this, post it over in the trade alerts. Alright, closing, or limit order to close SPY. Oops, SPY 384, 385. Call debit spread expiring 12/29 at 15 each. Premium 101 premium. Okay, so we should maybe get filled. Fingers crossed. Nope. Is there a way on brokerage platform like Hood or Thinkorswim where you can see the options price graph and compare it to the stock price graph? I mean, you can put them like side by side, I guess. I don't think there's any sort of like overlaid. So you're probably thinking about like overlaying SPY graph on top of this, and there's no way to do that. But what you can do is just separate the two. But that order got filled, so let me type in filled check mark. $384, $385 strike prices is what we bought. Opened 5 at 38 each, closed them at 15. 23 times 5 of $115 loss. Alright, let me type that into my options tracker so I don't forget it, because I do tend to forget. Come on now. Cash type. Alright, so I had a call debit spread, 384, 385 strike prices. I haven't opened it yet. SPY. Call debit. This was a bullish strategy. Expiring today. 384 was my long, 385 was my short. Quantity was just 5 of them. I opened them for how much piece? 38, closed them for 15.38, 0.15. So $115 loss you see right here, and then We'll work on closing the 383, 382 call debit spread while we're at it, just so we don't start losing our profits there. 5-8. We got 10 of these left. I'll try to close them at 58. I don't want to give in to the market makers. Oh, well, I thought that said 1160. I'm not sure how that showed up, but yeah, out of that one. All right. Closing options alert, premium 101, premium. Just took profits on the rest of the SPY 382, 383 call debit spreads. These expire 12/29 at 50. How much? 58 each. And I closed the rest of those. Let's see. 382, 383. God dang it. Discord keeps crashing on me. SPY call 382, 383. Where is it? Oh, there it is. Okay. So I closed 20 at 60 plus 10 at 58, 1780 total credit to close divided by the 30 that I opened. So basically a credit of 59 each in order to close the spread. So if we type in, I think I already had the strike prices set up and this trade set up. 0.59, so that one was a $570 profit. Closed 20 at 60 and originally opened at 40. So total, again, 570 credit, I think it was, or 570 profit. Double check. Yeah, 570. I still have an iron condor open, assuming SPY is going to be between 383, 385, and that one's profiting at the moment. You're asking for tomorrow. Well, you're saying that the stock market is going to continue to go up when really there's no big news that's coming out tomorrow. So right now, SPY is trading at 384 basically. So you're assuming that it's going to go up another $1, which isn't a lot. But I would rather choose a lower strike price and a higher strike price if you're going to set up an iron condor. It's just my take on it. But the thing about Fridays is that they're usually a bit more volatile because there's more options that expire on Fridays versus the rest of the week. More people trade weekly options than the daily options, just like more people trade monthly options than the weekly options. So you're going to have a lot of buying and selling pressure from the market makers, the people that sell the options to the people that are buying them. They have to hedge their positions by buying and selling hundreds of shares of the company for each call that they buy or each put that they buy, or each put or call that they sell. So you're going to get some push back and forth for SPY. So I don't know if I would do an iron condor for tomorrow. Usually the last day of the year is always green. That could work out. I wouldn't be super duper confident in that. My assumption was that SPY would be, I think, above 383 tomorrow. So I closed that spread already. That trade is already gone. Let's see. Let me pull back up the. Actually, yeah, let's look for a trade that expires tomorrow. If end of year is usually bullish, then I would say maybe do a call debit spread above 384. You're probably gonna pay a pretty penny to open that, just because we're already at 384 basically. But my assumption, we're probably gonna be flat tomorrow, and if I had to guess, I would say anywhere between 381 and 388. So 2 points down, 4 points up. That would be the trade that I set up. So let me actually see how much that's paying. So an Iron Condor between 382, I think it was, or 381, if you want to be safe. Expiring tomorrow, 381. Okay. And just the put is paying a decent credit. So you could just open a put credit spread and you'd be able to make profits on this. A decent profit. Unless there's like some crazy news that comes out overnight. But what's the likelihood of that, right? Pretty low. Let's see. And then if you add the call to it, assuming that it's going to stay below 387, that one's actually paying more in credit. It's what it looks like, even though it's a further away strike price. Interesting enough. Total credit is 32, to assume that it'll be between 381 and 387. That's a decent credit. I would be, like you said, it's usually bullish to end the year. And the credit just for the put credit spread is nice. I would be hesitant to go heavy on the trade, just because, again, it is a Friday. Fridays are usually more volatile than other days of the week. So play it careful. Don't size too large. Let's see. But just the 381 put credit spread is paying 18 cents. I probably wouldn't be willing to risk more than about like 500. Usually Friday trades I scale down just because of the volatility of it. So I think I'll open just the put side for right now. Let's see. All right, so I open that put credit spread, assuming that it's going to stay above 381. If we go below 381.39, then I'll probably consider closing. Actually, I probably want to call it closer than that, but let me find some more supports. Let me send this trade alert through first. New options alert. P1. Okay. Just opened a new 381, 380 put credit spread. This one expires tomorrow at 12:30 at 18 each. So small credit that I got for it. But again, I don't like to size large on Fridays. Terrified of Fridays. Assuming another slow day tomorrow with no major econ news, and statistically SPY goes up last day of year, so assuming flat or up tomorrow. I could also make the argument that SPY might go down tomorrow, and the reason for that would be tax loss harvesting, because if you look at any major stock, like Apple, for example, is at basically a yearly low. So what high net worth individuals will do, since they probably bought during the year in order to save on their taxes, they'll write off like $3,000. The max you can write off is like $3,000. So you can't just like write off infinite losses, but you can write that off on your taxes to save a little bit of money there. So we might end up selling off because of that tomorrow too. And again, I think that context is important too. How the stock performed during the year. Let's see if I can make a 5-year time frame and go back to the last time that the Fed was raising interest rates. Actually, it was before that. We're going to have to go back 10 years. So this is going to be very small candles. But the furthest we can go back is 2019. So that sucks. SPY performed very well in 2019. I wish I could get a longer time frame here instead of just 2019. Oh, I guess we can pull up 2018 was pretty flat year. Obviously this year was very red, but on the flat year we had a red day. 2017, I'm not sure how we performed, but yeah, I think that tax loss harvesting will have some effect on a possible sell-off tomorrow. QQQ analysis. So obviously in a downtrend over the last year. Daily chart, it's kind of just trading flat in a range between about 260. Dipped right below it at 254, and then a top at around 292. I already have a crap ton of price levels drawn up on it already, but I'll do a quick little price analysis just based on price levels. So what I like to do whenever I'm doing price levels, I'll start with the daily chart. I'll look for gaps in the chart. So there was a gap right here between 6.9 and 610. So we'll take the bottom of the gap because that acted as more of a resistance than the top of the gap, at least for recent trading. So that's going to be your highest resistance, and the highest point of that candle was 294.87. 294.87. Oh, SPY. I think Robinhood just closed my iron condor for me. Yep. Oh. These assholes. Did they really close it at... Okay, they closed it at 15. No? What is this? What? Bruh. Okay. Let me just go to SPY. Do I think SPY will drop to 350? My estimate is 320 by next year, sometime next year. The gap was filled, but that doesn't mean that it can't act as a support or resistance level. Where the hell is the iron condor that they closed on my behalf? There we go. hell? Come on now, man. There we go. All right, so 225.90 and then 580, 575. So they closed them separately, which is dumb as hell. What? I have no idea what price they closed this shit at. It says 19, so I'm just going to go with that. Even though I know if they close it at 19, I definitely got ripped off with that shit. All right, it says 15 a contract, so I'll go based on that. Okay. So Robinhood closed these at 15 each. We'll see what other ones we got open. Robinhood close the put side on the 382, 383 to 385, 386 SPY Iron Condor at 15 a piece each. Oops. Premium 101. But they didn't close the call side, is what it looks like. I don't know why they wouldn't close the calls, but okay. Yeah, these are going for 2 cents a piece, so we'd be closing them for a total. On the put side and the call side, we'd be closing them for a total of 17 since Robinhood closed them at 15. Originally, I got 19 credit, so $30 of profit. I'm surprised that they didn't close at 385, 386. I guess Robinhood doesn't think that SPY is going to go up to end the day. Even though we're back above 383.6. Yeah, I'm going to close it. Screw that. Probably won't get it for 1 cent, so I'm just going to have to put it in for the ask it too. No, I'm not paying a debit to close these. Oh, did it just close those two on my behalf? Oh, Robinhood. Why do they gotta be so confusing with me? It's saying that I have 15 available here, but 0 available here. How does that make any sense? Make it make sense, Robinhood. Please. Do you guys teach from scratch? I have less than a month trading options. I do one-on-one coaching. If you go to my Calendly link, that's more conducive probably to beginners. You can come to the Q&As in the premium Discord that I host on Sundays. But if you're a beginner, you might need more individualized because there's about 100 people in the premium Discord, so about 15 to 20 of them show up to the Q&As each week. And it's usually more advanced talk that goes on in the Q&As. So you can decide for yourself which one you think is best, but I'll link the Calendly. Let's see. And I've taught people from basic beginners all the way up to even advanced traders, people with millions of dollars to work with. So I've got a range of experience that I've taught. Yeah, no problem. But yeah, if we look at the Qs, go back to that price analysis that I was doing earlier. We had that 294.87 gap. And then the bottom, we've had, This one looks more like a round number that the market's like at like 260, I'd guess, based on this candle right here. 260 would be the price level. This is probably another support level right here. So this is what's known as a candle of significance, or a candle that's much larger than the rest of the candles. So it's 255.16 was the open. So you take the open price, the closed price, and divide by 2. So it's 255.16, closed at 268.82. Divide that by 2, and you get 261.99. 261, so basically 262, but I like to be as accurate as possible, so we'll type in 261.99. These are pretty close together. I don't usually like to keep my price levels too close together, but since this is the yearly chart and I mostly rely on the hourly and the 5-minute chart, we can keep it. Next price level up would be the gap that was created from 11.9 to 11.10. So that high was 268.56. All right, so that's the next resistance level. Let's see, there's not any real candles of significance around here, but you can use the top of that gap too, or the bottom of the, the bottom of this gap would also work. So this one, the high was 275.15. Then I'll try to look for some candles of significance, if we can find any decent ones. This one was definitely a candle of significance. 280.84, 280.84 plus 293.36. 293.36 plus 280.84. Divide that by 2 and you get 287.1. There's not really much resistance all around that level, but could act as a future resistance. But yeah, so that's the daily chart. Then I like to use the hourly chart to get a little bit more granular. And for the hourly charts, I usually use the open and the closing prices. So some relevant prices. If I think that Q's is going to go up tomorrow, I'd probably use, we can go a little bit further. Probably this range right here, so shorten it down. So obviously very likely to be 260 to 287, and I mean if Q's goes up 20 points tomorrow, like 10%, then that would be out of this freaking world. So very unlikely. But let's see if we can find some closing prices. There's one right here at around 274, which is close to the 275.15 mark, so we could use that. So the close of the 3 p.m. candle on 12/16 was 274.22. Let's see, there's another close close to where we are right now at 270-ish. Close at 3 p.m. on 12/20 was 269.57. 269.57. There's probably not going to be any relevant price levels for the upside for the Qs tomorrow. So let's look for some downside targets. We could use close on 12/27, which was 263.54. So if I had to guess, I would assume that Q's is going to be above that price level. What was it again? 256? No, sorry. 263.54. So I would assume that Q's would either be above 264 or 263 for tomorrow. You do have some candles of significance on this chart, like this large candle. This is a large one that's been a resistance for today too. Open at 268.53, closed at 265.71. Divide that by 2 and you get 261.12. Yeah. All right. So those are the important price levels that I'll probably be watching if I'm trading QQQ tomorrow. I usually just trade SPY. I don't dive too deep into tech because it is a little bit more volatile than SPY. Harder to predict for me, so mostly avoid it. Let's see if Robinhood ever closed those call credit spreads. Yeah. 2 cents each. So close the iron condor for a total of 17 apiece. Closing options alerts. Premium 101. Premium Robinhood finished closing the 382, 383 to 385, 386. SPY Iron Condor. This one expires tomorrow, or today, 12/29 at 2 each. Call side. Okay. Closed at total of 17. 385, 386, and I originally opened those I think at 19 each. So $30 a profit. Annoying, but it is what it is. Because now these would probably be worth like 10 cents. It would be a lot closer to max profit than if Robinhood didn't close these spreads for me, but that's the name of the game. Originally opened at 19 each, so 30 profit for this trade. What are the challenges for a small account trader, and how do you manage growing your account? The challenges of having a small account is making it sustainable, I would say. So this year I've averaged around 4 to 5% a year, and I'm a very active trader. Like, I spend about 2 to 3 hours a day trading options, and I make about 4 to 5%. So say you're starting out with $1,000, you're putting in the same amount of time that I am. You don't have, or if you have less time to trade, then you might get less returns depending on how effective you are at trading. But if you're starting out with a small account, say $1,000, and you're making 5% a month on average, that's about $50 a month. So, if you want to do it for a living, if you want to trade in order to live, it's very difficult if you're only making $50 a month. So I trade with around $10,000. So for me, I'm making about $500 a month. And like I said, I spend about 3 hours a day trading. So about 20 trading days. times 3 hours a day, divided by the money that I make. Is that how it works? Do I make 12 cents an hour? Does that sound right? 60? No. So 60 hours total each month. 500 divided by 60 total hours. Make like $8 an hour. But obviously that increases as the account size grows, right? So if I'm trading with now like $100,000 and I'm still able to get that 4 or 5% return, let's call it 5 just for round number sake. Now I'm making $5,000 if I'm trading 3 hours a day. So 5,000 divided by the 60 hours that I work a month will be $83 an hour. And obviously that just continues to compound as your account size grows. So if you're trading with a small account, you're only going to be making like $50 a month. So you're making like 83 cents an hour. So that's really the struggle of having a small account. I would say in order to grow your account as quickly as possible, the most important things that you can have is buying power, cash. Time is very important. The more time that you can dedicate to trading, the quicker that you're going to get better at trading. So if you can nail those 3 down, if you can put in more time and effort and conscious effort into your trading, like you can trade all day and not put a thought into it. Like I can just go and buy random SPY calls every day, but if I don't actually like refine my strategies to get better, then all that time that I'm spending buying these random call options is wasted. So time, effort are very important. Tracking your trades, I would say, is definitely up there, and learning from your mistakes. Putting more time into trading if you can, and then having a lot of buying power so you can take on opportunities. Like, say you have $1,000 and you spent like 80% of it already. You have 80% of your money in open positions. That means you only have $200 to trade with now. So you might only be able to make like 1, maybe 2 more trades at most, right? So the more buying power that you have available to you, the more opportunities that you can take. And usually the more opportunities that you can take, you're going to run into what's known as a tail event. So that's an unlikely trade that ends up paying off in a big way. So it works a lot like the stock market, where about 10% of companies make up probably about 90% of the returns of the S&P 500. It's pretty fractile. So 10% of the companies make up 90% of the returns of the S&P 500. I think something along the lines of probably 90%, 95% of companies have gone bankrupt that have been in the S&P 500. Obviously, this is over a long period of time, like since S&P was created back in God knows when. Let's see. When was S&P 500 created? (1957). So basically over the last 70 years, about 95% of companies have gone bankrupt. How many companies in S&P 500 have gone bankrupt? Oh, I overestimated it. Since 2000. Okay, so since 2000, 52% of companies have gone bankrupt. Let's see. I wonder if we can find since the initiation of it, though. Really? In fact, the market value of S&P 500 companies that have survived is only 31%. So about 70% of companies have gone bankrupt since S&P 500. So I guess I overpredicted that a little bit. But basically, a lot of companies in the S&P 500 end up going bankrupt, and then they get, succeeded by new, more innovative companies. Right now, you're seeing the transition from ICE, regular vehicles, to EV. The companies that have made ICE vehicles, regular vehicles in the past, likely to go bankrupt because it's going to cost them a lot of money to develop the infrastructure for electric vehicles. Now, that is going to be heavily subsidized by the government, so kind of like another bailout, basically. But that's not to say that they still can't go bankrupt, even with the government support. There are only two ICE companies that haven't gone, or I guess automobile companies that haven't gone bankrupt in America, which is Ford and Tesla. All the rest of them have either gone bankrupt or they've merged with one another. So, again, it's just a typical cycle of new companies making innovative products, which ends up making the other products that the old companies were making obsolete. What stocks are you looking to invest in right now? The stocks that I'm investing in are Fulgent Genetics. It's a genetic testing company. Tesla. I have Uvixi shares, not planning to hold that for the long term, but I do have 370 shares of it. And then if we head over to my Fidelity account, I have a lot more Tesla there. And I actually got it for about the same price that Tesla is trading now. I started buying heavily back in summer of 2020, so not really feeling the pain as somebody who bought in 2021 and 2022. But let's see. I have a cash account in Robinhood. Should I turn it into a margin account? So just because you have a margin account doesn't mean that you have to take out margin with it. There's a difference between a margin loan and a margin account. Whenever you take out a margin loan, then you're borrowing from your brokerage, which is going to cost you in APR or interest. I think usual APR rates right now are probably around the levels of like 9%. But you can have a margin account, and the benefits of a margin account over a cash account is that you can start to trade spread options. So level 3 options trading. You can enable level 3 options trading. You can take out margin if you want to. You don't have to, and I wouldn't recommend taking out margin right now because, again, rates are going up, and stocks are really feeling the pain. And what are the other benefits? There are some drawbacks to a margin account, though. With a margin account, you can't day trade more than 3 times a week. If you have a cash account, you can day trade more than 3 times a week if you have less than $25,000. If you have more than $25,000, then you can make as many day trades as you want, whether you have a margin account or a cash account. So those are the main differences between the two. Let's see. Supposed to get a text message. Messages. $390, $692. Okay. Yeah, no problem. All right. So the rest of the stocks that I'm invested in is over on my Fidelity account, and I have another 35 shares of Tesla here on top of the 3 or 4 shares that I have on my Robinhood. I have 47 shares of QQQX, which is a dividend stock, which is really actually a covered call fund. So it's a company that sells covered calls and pays you a dividend. It's really just a payout of what they're receiving from the cover calls. The annual return on this is about 8% a year, just from the cover calls that they sell. And the benefit of QQQX versus QYLD is they use naked calls. So they use margin and they sell half of the sell cover calls and half of the shares that they own. That way they don't sacrifice growth. So QQQX has performed a lot better than QYLD if you look at the performance chart. Then I have 20 shares of MAPS. I bought a penny company before or a penny stock before it became a penny stock. Got 20 shares of this. Average cost is $18.56. I really loved the company and what they were doing, but the management team has just been god awful at managing the company in a proper way to facilitate growth. And they had very rosy projections whenever they were going public, and those projections have not turned out to be true. So, yeah. Anyway, that is the end of the trading day. It's 4 p.m. I will be on tomorrow, same time as usual, at 9:30 in the morning instead of this 3 p.m. session. Again, I only did this to see my daughter this morning. So I will catch y'all tomorrow. Hopefully y'all have a great night, and see you later.